right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Of course, I want to do a daily Bitcoin and Bitcoin miner update. Bitcoin's on the move. The miners are on the move. This is a daily update special edition post the Fed meeting. So the Fed did its thing today, and we're going to talk about how that affected Bitcoin and maybe what we can expect next. So if you're new to the channel or if you have not yet subscribed, please hit the subscribe button and the notification bell. Also, if everybody could please smash the like button, I would appreciate it. It helps the channel out a lot. Lastly, you can hit the join button and become a member of the channel. The join button is right next to the subscribe button on the YouTube page. If you don't see a join button, there should be a link in the description. Okay, let's go through Bitcoin. So it was a very exciting finish to the day today. The last couple of hours, the news came out that it was going to be a 25 basis point rate hike. That, as we had talked about several times on the channel, that was basically 100% built into the market and priced in. So anything other than that was going to be potentially be a problem. So there were two big hurdles I think we needed to jump over. I think we hit one of them today. I will do a separate video to go through the Fed meeting in detail. So most of the price action happened right after the Fed meeting. In the 1 hour after the Fed meeting, we were up and down. The market could not decide. And then Bitcoin started to run. And then the Bitcoin miners started to run. So I want to start out. Let's just take a look at the big board. You can see this turned into a very, very green day. This was a mixed day for most of the day. Very sideways, but picked up huge momentum at the end of the day. And a lot of the larger miners had big up days. So Cypher led the way. They were up 15% today. Bitfarms was up over 12.5%. HUT was up under just 12%. RIOT, which is the largest market cap out of all these companies, was up 9.4%. So Marathon, which is the second largest, was up 4.3%. So still a solid move. It didn't run away today, but a very nice move. Hive was up 7.5%. So you can see a very green board. There were a couple of things that were a little bit red, 1% to the downside, Argo Blockchain and Mawson, stock ticker MIGI, but mostly everything turned around and ran for the last few hours of the day, and Bitcoin continued to run after the equity markets closed in the US, and it still, at the moment, looks like it might have some momentum. So we'll see where we're going to go from here. Okay, so this is Bitcoin on the 15-minute time frame. So you'll see, as always, there's an orange line. This is where Bitcoin was when the equity markets closed yesterday. Bitcoin is about $23,094. And you can see we basically hung around this line all night last night and really all day today. This was turning into a little bit of resistance. And then this 15-minute candle right here was when the Fed number came out. And then you can see it took a couple of 15-minute candles to decide which way they were going. It looked like we were going to move down initially, but then within the hour, we started to take a big move to the upside. We ran into just a tiny bit of resistance at this green line, but we really pushed right through that in the next 15-minute candle. That's at about 23,250. So what I've been saying for the last week is that if we can stay above this 22,300 area and establish that as support, then I think we can finish out this run, which I've been saying was going to get to 25, hopefully. That was my second price target. This purple line down here was my first price target, which we've passed. That was 22,400. We're now at 23,762 as I'm making this video. So you can see we're well past that, and we're halfway to my next price target. If I go to the 4-hour time frame, you're going to see we did break above this green line once before, and this green line really goes back a long way. Other than this candle wick here, if you trace this backwards, you have to go all the way back to August of 2022. The last time we were above this green line. So this was a pretty significant line of resistance. You can see we bumped into it even on the 4-hour time frame here for a lot of candles. This was several days. It looked like we broke out. It turns out that was a bit of a fake out, and it turned right back around. But now here with the Fed, we have another breakout to the upside. So is this one going to hold? That is the question. So what I'm looking for is this purple line here at 25,200. That was the peak of the relief rally in August of 2022. So that's where Bitcoin got to in August of 2022. And I do think we could get to that in this relief rally right here. But that is asking a lot. You're going to see that will have ended up being a huge relief rally. This has already been a very big relief rally. This is the largest rally we've had since October of 2021. So that was just before Bitcoin hit its all-time high. So, that's coming up on a year and a half ago now. So if I go from the low that we hit on Monday, November 21st, and that was kind of a double bottom, until where we are right now, we are up 53%. So this is a 50+% rally. If we get to my price target of 25,200, this will have been a 62.5% rally. So at some point, there does exist the possibility that this is the beginning of a bull market. It's too early to call that. This is the first higher high we've had in over a year, so that is a good sign. Obviously, this is a fantastic run up, the best rally we've had in well over a year, but we're not ready to call a bull market yet. This still could turn around and we still could test lower numbers. But what I'd like to do is have this rally finish up and get to 25,000. That's what we've been pulling for days and days here. So we're in the home stretch. If I measure from where we are right now up into that purple line, which is my target price at about 25,200, we're only about 6% away from that. So Bitcoin has made its way most of the way to this second price target. So I am hopeful. I will show you guys. So the last thing to consider is right above this price target, there is a giant gap from about 25,000 to just under 29,000. And you'll see that Bitcoin has almost never traded inside this gap, just 2 days here and just 3 days here. Other than that, you have to go all the way back to the year 2020 was the last time we traded in that range. So for the last 2+ years, we really have not traded. That is a gap, and oftentimes gaps get filled. So the question becomes, the first thing is, can we get to 25,200? That's the price target I'm going for. And then at that point, is there resistance? And if we break that resistance, there's a big gap up to just under 29,000. So I'm not ready to call that yet. I do think we're going to find some resistance at 25,000. So I think we're going to have to reevaluate from there. We are very, very overheated and have been for weeks and weeks. So this is the daily RSI, and you're going to see this got up to almost 90 on January 15th. So that's 2 weeks ago now. So for the last 2 weeks, we've been hanging out in overbought territory. This very, very rarely ever happens. The last time this happened again was over 2 years ago in January of 2021 when we started the giant bull rally to get ourselves what ultimately ended up to be the rally up to 69,000. And we have not been back there since. And for the most part, we really don't get over 60 on the daily RSI. 70 is considered overbought. We did get up to 90. We just came and bounced off of 70. And we're heading back up. So I do think there's a little bit more room to extend this, but at some point the daily RSI is gonna need a reset in all likelihood. So I think we're already asking a lot to get to 25, but I do think it has the room left to get there. Just a quick look at the fear and greed index. You're gonna see the fear and greed index is at 56. Technically that is in greed. I do believe it got to 61 a couple of days ago. So it has spent 3 or 4 days in greed. Now that is the very, very low end of greed. Obviously that's much closer to neutral. I would call that still neutral, but it technically, we're nowhere near the top on this list. And we spent almost the entire year in fear in 2022. So this was between 6 and 30 for most of the year last year. So this is really our first breakout in a year above neutral into the fear territory. So like I said, I do think even this indicator shows that we're starting to get overbought, but there's a little room maybe to run left. So let me just quickly go through what the Fed said, because essentially we got exactly what we expected. I took some notes from Jerome Powell's speech. So I'm just going to give you a few quotes. Again, if you've been watching this channel all along, this was absolutely exactly what we expected. The 25 basis points we had said was 100% built into the market. So that was priced in. So 50 basis points would have been a big problem. We avoided that. We got the 25 that we thought we were going to get. We also got the talking points that we thought we were going to get. So I really feel like there's absolutely nobody who watched this today and was surprised in any way, shape, or form. So I just want to give you a few quotes from that meeting. Number one, he said they're going to need, quote, substantially more evidence before they make any policy changes. So he's saying, we've seen some good numbers. It's not enough. We need to see a lot more. Number two, he did say they are going to slow the pace down, but they are going to keep going as long as it is necessary to get back to inflation at 2%. So they already slowed the pace down. They went from 75 basis points to 50 basis points. This was 25 basis points, but he did seem to indicate that there was more to come. And the market has priced one more of these moves in and maybe a 50% chance of 2 more. I think that's highly likely. So slowing the pace is what he talked about, but not stopping until the job is done. So direct quote was, stay the course until the job is done. And then lastly, he said, historical record cautions strongly against prematurely loosening policy. So that is his big statement that he has reiterated. he is going back to the late 70s and early 80s where inflation did get out of control. They got behind it. They never really caught up to it, and it turned into a big, big problem. So he has been saying he's going to err on the side of caution, and he's citing history as his example. So these are all pretty much word for word his talking points over the last 3 or 4 months. So there's no new news here at all, and I think that's why the market ran. I'm hoping it continues to run. So it looks like maybe the market, this rally took a little bit of a pause for the few days before the Fed meeting. Everybody got what they expected, and the knee-jerk reaction here is a move to the upside. But I would caution everybody, sometimes it takes 24 hours to digest all of this, so I don't think we're out of the woods. It's not straight up from here. And the other thing is, remember, after the bell tomorrow, Apple, Alphabet, and Amazon are all reporting earnings. So 3 of the 4 biggest companies in the United States are reporting earnings after hours tomorrow. So that's the next big hurdle that we need to jump over. So we got through the Fed situation, and it looks like we're moving to the upside. If we can get through those earnings, then maybe we can keep rallying from here. So obviously, we'll keep a close eye on this. I just wanted to give you guys a quick update. That's all I have for you today. So thanks so much for watching, and we will see you in the next video.